The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin. If you have any questions, feel free to give me a call. You can call in about forex, futures, stocks, options, binaries, and spreads on any market. Be glad to help answer any questions that you do have. You can reach me right here at 877-927-6648. Again, that's 877-927-6648. Also, don't forget you can listen to us from anywhere on your mobile phone at tfnn.mobi. Let's go ahead and check out right now where the markets are sitting at. They've been down, they've been up, they've been trying to fill their gaps. One of the markets has actually been able to fill its gap, and but it's bouncing right off of that level right now. I got some information coming out of Cyprus, and we're waiting to get the full details on that. But looking right now, we got the S&P, it's down 4.5 points. We have the Nasdaq down 5.75. The Russell's down 3.7, with the Dow down 42. We got gold up 9.9 right now on the day, and we got silver down about 1/3% at the moment, with copper flat on the day. Oil right now is down 20 cents, with corn up 5.5 and soybeans up nearly 8 points. Euro dollar's down 9.83 pips, pound dollar down 51, Aussie dollar down 50, euro yen down $1.02 there. We got pound yen's down 63, US yen down 13. With U.S. Canadian up 7 and U.S. franc is up 60 at the moment. So what all is going on in the markets? Well, we had several things happening, but one of those big things that's going on right now is we had the Cyprus deal they're working on. They basically averted the crisis, as they want to say. But they're basically restructuring the capital lending requirements. They're going to have to basically totally reformat two of the banks and restructure two of the banks, and that may involve layoffs. It may involve a lot of different things. And they're promising that they're going to open the banks tomorrow. Of course, I think that was supposed to happen last Tuesday, then Thursday, then this Tuesday. Now it's Wednesday. We'll see. Anyway, so they keep putting that off. Even when they do open them, they're talking about having actual rules and limitations, like on how much money can be taken out, how much money can be transferred, because basically they want to try to prevent people from going in and pulling all their money out of the banks. Well, it's their money, right? But they don't want to run on the banks and the banking system collapses because everybody comes in and does it, so they'll just have a slow bleed run on the banks. So instead of having it happen in one day, they want to have people run on the banks over the course of a week or two. And, whatever the max is, I'd be in there trying to figure out how to get every penny out and put it somewhere else. The mattress, honestly, would feel safer. Like I talked about a few days ago, I read a story about a reporter that was out there, moved to Cyprus, and talked about how he went in. He was using his debit cards. He had cash that he was keeping in reserve, and he's glad he did. He went into a pharmacy and to buy basically some medicine and some food for his daughter, and gave him his debit card, and they said they're not taking debit cards, they're only taking cash, because most of the suppliers were only taking cash. So he had to pay with cash, but he was glad he had it. But for those who didn't, obviously you can see how tough things got. And all the more reason that you'd want to, after experiencing something like that, you'd want to have the majority of your cash at your house. And, even if you wanted the cash, but you definitely want the cash there. And it's just sort of, I think about, my grandmother and other people I've met who lived through the Great Depression and how they keep everything, and to a fault. I mean, they literally keep everything. But after they went through certain things and the fear and the things that they saw as kids, they're just that much more prone. And so now you have a whole new generation coming up with that out of Cyprus. And is it the same thing? Not as bad. Maybe worse? Who knows? I mean, it's really going to be interesting to see how this whole thing plays out over time. But they're supposed to open the banks tomorrow, and later today, they're supposed to be releasing, like I said, some information on what the contingencies are going to be, how they're going to do the restructures, the capital requirements they're going to give to these banks. And they may even have like different levels and days, and like a week of requirements and then another week of requirements. And basically it's going to be touch and go as they're trying to keep it all up. And the EU had to figure out a way to work with them because at the end of the day, I mean, it was poker, and they basically called it when their parliament voted against it. What's really ironic is how the German parliament actually has to vote for something, which, I mean, I get because it's the whole EU. But and this happened back whenever they did the ruling, I don't know, what was that? That was earlier in the year. I want to say it was like September or something. but last year where they went in, they had to do the ruling on how they were going to allow for additional bailouts to happen, and the German Supreme Court said that they could go above the cap and above the limit, but that the German Parliament had to vote on it. So with this going through, now the German Parliament actually has to agree on it as well, and I'm sure they will because they don't want it crashing and they don't want it going down. And a lot of people are saying, "Oh, this is no big deal. It's no worse than Greece or any of the others." The amount is not, but the actions that they took showed what they're willing to do. And that was on a small amount of money comparative to these other countries. So if they're willing to go that far to even consider seizing money out of bank accounts, then how far are they willing to go if it means the collapse of the system? Well, as far as it takes. There are no rules. And if that's what it takes to make it happen, then that's what they're going to do. And that's basically what they introduced with this issue. So it actually, in many ways, is bigger than the previous issues with Greek and Portugal and Ireland and all that have been a lot more money has been involved, simply because it showed the new measures that could be taken if necessary. So even though financially it may not be the biggest issue, psychologically, which is what drives everything, psychologically it was probably the biggest issue that they've had so far with the EU. And they've had to dance around it, and the only reason it hasn't just completely collapsed everything is because it is a small amount of money. But in the back of everybody's minds going forward from now on, they will have that thought of, well, if we're up, should I go ahead and pull my money out? I know if I was in a European country and all of a sudden we were starting to ask for bailouts and we were going into a weekend, I'd be running to grab my money from the bank. So, because why would you risk it, And, I can put money in every day for whatever bills I got to pay, through cards or checks or whatever. But, it's a good thing they're getting this stuff up running. I mean, there's a lot of other things. I saw two people trying to have, auto debits and deposits and checks and payments for just electric bills and water bills and just basic things they had on auto payment. And all their money was tied up in the bank and they weren't doing transactions on a lot of stuff. So, it was very, this will be a big psychologically defining moment. And it may be a few months before we see it. Where we'll really see the impact, I think, is when the next announcement, the next issue happens. And how do people react to that? Do they recall what happened with Cyprus and wonder if they're next, or do they think, hey, they solved that, they'll solve this, and it'll all be okay? I think that'll truly know. At that point, that's when we'll truly know how big of a defining moment this was. So, anyways, either way, no matter what's happening, what do? We follow the charts, right? So the fundamentals are good to just be aware of things and know sort of what's going on. And really the only tradable reason for the fundamentals is what I call fundamental shock, or, news shock, where you go in and you're looking at when a news report comes out. It takes about 15 minutes or so. And then that's when the technicals are sort of off the table. Okay. But every other time, your technicals are what you need to be looking at. And even when that's happening on your technicals, you need to tighten your stops. Just knowing that bus is about to come across the street, you need to look both ways before you cross it. So let's check out a few of the charts. Let's look at a few of the different fundamentals that have come out and how you could have played some of those. We talked about some trades yesterday, and we can go in and let's look at them, see what we got. So right here, we had a few trades get launched out this morning. And so we talked about one of those was the pound yen early AM. So let's go ahead and check out, or the pound dollar, either one. So if we're looking at, say, pound dollar or pound yen, right here, I mean, you can tell where the news happened. 530 was really nice because it lined right up for us, right around the deviation, or right around the settlement level. And I like that when it does that, because that means that you usually get some really good choices of spreads and binaries. And you put the trade on, and let's zoom in a little bit tighter over here and make those bars a little more legible for you. And what you can see over here, market comes on out, and 520 right there, about to close at 529 at the end there. We got to close 51.65. The news comes out, pound current account much lower than expected. Final GDP coming in at expectations. Revised business sentiment was a little better, basically a little less negative, but really that's the minor impact report. The big impact report was that current account, and it was negative. And as you can see, I mean, it didn't take any time at all. A matter of about 15, 20 minutes at most. But the market, if we go down and zoom into 1 minute bars on this chart, and back out just a little bit here to the morning time here, and you can see that as soon as that report came out right there, you got 1, 2, 3, and then 4, bam, and then so literally came all the way down and hit the half deviation level, oscillated for a little bit, hit 0.7, and then kept going, hit the 1 deviation. So, I mean, it was a massive, massive move on the day. And but all triggered by that one news announcement. That's the one we said to watch out for. That's the one to look at for the spreads to straddle with. And you can go in again. You can use the spread scanner right here. Get your 2-week free trial. But you just go to pound dollar, and you would have went to both, and then it's going to show you there's your straddles right there. So just pick the one that you want. So if you want to pick, say, the 3 o'clock expiration one, you can go here. You can go here. You have about a $20 risk on the trade. So if you can take off a profit of $30, then you got your $20 risk, plus you got your $10 you lost on the other side. And, you only need 30 pips from here in order to actually be able to walk in a nice profit on the pound dollar. You have till 3 o'clock in this instance to do that. Of course, the best time to enter the straddles is going to be before a news announcement, because that's when you expect the market to move and you know what market you want to be focusing on. So that was our pound dollar right there. That's how it moved for us. And let's see here. Let's look at where it's at just right now with the deviations. We go in, we can focus back in on 10 minutes. Pull this on back out and zoom back in. And as you can see, we got right down here. I mean, just right down to the deviation. And we closed there at 50. Let's see, I just want to get the exact price for you. We got to close at 59.6 right on the deviation. So either you decided to tighten your stop just because that was a big move, or if you tighten your stop right here, and if you tighten it there and then it closed below it but didn't close below the next level, came back up, closed above it, and then closed below it again, you would have tightened it again right here, and you have a few ticks above this, so you want to have your bid-ask spread plus a tick, okay? So a pound dollar, you're usually going to have 1 to 3 pips, just depending upon who your broker is, and or if you're using Nadex, then you're just trailing it down with that. You haven't got hit yet, you're still in the trade, or if you did decide to go ahead and move it down when it touched that deviation level, because the only reason I would do that is like at a 1 deviation, you may want to tighten it if it touches it. So because it's 1 deviation, that's the most movement we expect in a given day. So that is a full deviation move. That's a huge move. If you caught that, that is a great, fantastic trade. And you had every reason to catch it. It wasn't just one of those out of the blue lucky trades. I mean, it's a solid 60, 70 pips right there based on a pure news reaction. And you just followed the news. You went long, you went short, and either you closed out your trade at a 1-to-1, or you trailed your stop down if you wanted to. And it's a little riskier in the sense of a lot of times news can go down and pop back in the other direction, but it was definitely there. It was tradable, and you could have taken advantage of it and basically rode the spread as far as possible. Now, if you were using the spreads, the latest spread you could have had would have been 7 o'clock, and so you would have closed, pretty much.
Time horizon and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And looking right here, just at the market, and looks like the pound dollar's going to pull on back up. And so now what we're doing is we're going in and checking out a few more things. And that's pound dollar. Let's go ahead and look at the other trade. We have the USD CAD. That one fired off, did really, really well. So let's go ahead and pull it up and look at it. Talked about this yesterday on the show. And you can pretty much guess where the announcement came out. So right here, we got the announcement starting to set on up. And but we had just a great move, and I usually say get into 1 to 15 minutes before, and 15 minutes would have really served you well because it dropped a little early on that 8:30 announcement. So let's go ahead and zoom in a little bit further on this trade. Check it out, look at it, see what the market did. All right, so we go over here, and we can see it was sitting like right at a 0.5 deviation level, and then right about 8:24, you see it started ticking down pretty quick. So 8:28, 8:29. I mean, we had some major movement there just in the few minutes leading up to it. So if you got in, say that, closer to that 15 minutes, I usually like to get in 5 to 15 minutes before. About the only time I'm getting in 1 minute before is if I just can't find a good trade. And then all of a sudden the market moves, where it's really lined up for me for a good balanced risk reward right before expiration. That's when I may actually fire the trade off really close to, not expiration, but really close to the news announcement. So I'd rather have some time so I have time to figure out where I'm getting in, what my risk is, what my take profit's going to be, putting all the pieces together. So when I'm looking at that right there, then I'm able to actually follow this and get in. And then as you can see, the market did have an excellent move, moved on down, and went from the 0.7 down here. Let's see, let's back out a little bit, a little easier to see. But it was up here at the 0.7 deviation level. And then it fell on down to 0.5, and then it fell on further down to settlement. Went a little bit below that. I mean, you easily could have taken profit on this trade. There's a number of different ways you could have done it. The 10-minute method would have worked just fine for you. And so we'll go in and look at that 10-minute method again. But we came over here. This is the bar that obviously closed below it. Now, if you just done the 1-to-1, you would have been in, out, done. Trade's over. Don't even have to think twice about it. But it comes back up. It closes above. Okay, now we're looking for a bar to close below the deviation after it closes above it. So it closes above it. This bar closes below the deviation. Let me get rid of this one. This may be a little confusing. It has a price alert on there. And so right there closes below it. When it comes back up to here, that would have knocked you out of the trade. Still would have captured your 1-to-1. But if you did the 1-to-1, to me, that's just simple where it's easier. Takes a little less, I guess you could say, skill. And because what you don't want is to fly down and fly back up and you give all the money back. So it makes it pretty easy to do. But again, 1 to 15 minutes before the news announcement at 8:30. Now, the next announcement we had, not quite as strong, but let's go ahead and check it out anyway. It's going over to the USD yen. And that announcement came on out this morning. Over here, we got 10 a.m. So if we go to 10 o'clock, basically went down to about half a deviation, but it only moved about basically a quarter of a deviation down and a quarter of a deviation up. So really not the best news trade. That one didn't work out, but you know what, 2 out of 3, not too bad. And oil was the other one you could check out. Oil has a lot of premium built in. I did not see a good oil trade this morning. I was looking for one, and I tried one on just like one contract, but all in all, really just didn't go all in on that one. And we can see right here the oil inventory report came out, and what we got was 3.3 million on expectation of 1.5 million. Fundamentally, that means that inventory should drop, right? Because that's one of the highest numbers we've had in the last several months. It's also much higher than the expectation. Supply is up. You'd think price would go down. So let's look at, is that what happened? Not really, not at all. So 10:30. So now that's the very basic surface of the news report. Okay, so I mean it basically just went straight up. And with enough time given in, you could have had a good trade and you would have made some decent profit on there because it actually did move far enough. But it took time to do it. So you would have needed a later expiration, like an end-of-day expiration. If you would have had that, then you could at least get out at break even or a small profit on the trade. Now, looking on over, I went for a shorter-term expiration. And it really just wasn't there because it didn't move fast enough. And you always want to make sure you look at the details on that report. And so like right here, here's the link for the summary of the report. And it goes in. They go into refinery inputs and, imports and commercial grade inventories and all that. They apply all the information, the detail. That's why I'm not directional, okay? Because if you just look at the base number, 3.3 million, I mean, you're thinking, hey, oil's going down, but it didn't go down. Doesn't mean anything. Fundamentals don't matter, okay? So that's why I trade both directions when a fundamental report comes out, and beyond that, I'm going to just trade the technicals. Because fundamentals can take a long time before they decide to, basically line up with reality. And, the reality in your bank account is a lot more important than the reality of a fundamental report. So, anyway, so that's a couple things to keep on mind. We'll come back, we'll check out some more markets and see what's coming up for us the rest of this week. Stay tuned. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. We'll decide to pull on back up and just keep on going. Doesn't want to look back right now. And looking right here, where would we have those stops? 10-minute bar method, bar that closes above a deviation. Settlement's one of those levels. So if we go over here and look at that, well, which bar closed above the deviation level? And what we have right there is that one. So that's where your stop would currently be shooting for what? What price are we going for right now? 96.86 would be the next level we'd be looking to tighten our stop up at and have that locked in. So, but right now you'd have some profits locked in. You'd be at least 1-to-1. If you did trade that report, and that was a difficult one. Like I said, there's a lot of premium usually built into oil, makes it a little more challenging top in there. And anyways, the market moves on down, hits 0.5, hits 0.7, crashes on down. If I am going to take the gap, this is when I'm going to take it right here, okay? So here's where the stop right here is at. I'm going to wait for that stop to be hit. That stop's finally hit, market starts moving back up. That's when I could consider taking the gap trade. So, but I would not want to take it like right on the open like I normally would. I mean, it's pretty close, I guess. You know, about 950 or so we get in there and it starts to pop back up. The one point that you can definitely justify taking it even sooner is that one deviation. So if you decide that you want to go ahead and get out of the deviation, or at least on part of your position at a deviation, not always a horrible thing. I mean, yeah, there are going to be days you could have 2 and 3 deviations. Yes. Are they going to happen often? No. So they're going to happen like 30% of the time or less. So knowing that this is, I mean, you grabbed a full deviation, is there a reason to give all this money back? Well, how much money is that? Well, I mean, that's, 33 ticks, 34, 35 ticks maybe by the time it hits it and bounces back up and you get out. So 35 ticks, $5 a tick. I mean, that's, easily, $160, $70. That gives you just a few ideas there on how to put all that stuff together. And looks like right now we have a caller on the line. And let's see here what we got going on. So are you there, Brett?
Yes, good morning, Darrell. Really appreciate everything you're doing. I had a question on those currency trades you set up this morning. Did you do those with binaries purely or spreads? I
like doing them with spreads. The reason is you can do them on either one. But the binaries they don't have the the intradays until 8 a.m. So like the pound dollar, you only could have done at 3 o'clock, which means it would have been further away because there would have been more time built into it.
Okay.
The other thing is on the spreads is if I have a spread and let's go and we'll pull up that pound dollar trade we were talking about. If I have a spread on here, and let's say I have a box here, and we'll just make. I mean, these are a lot smaller than what they really would be, but let's say I have a box, say like right here, and let's just say the market actually expired. We'll just say, for instance, like it didn't hit our profit level. Okay, on a binary, it has to hit your profit level. You're losing everything. Okay, let's say it expired right here, and I sold it at this level. Then I would get my risk back and make some money, even though my profit target may have been down here. Okay.
Okay.
Because the spread is not an all or nothing. It's basically the difference between where you buy and where you sell. Just like trading the actual say forex market. Whereas a binary, I mean, it has to be below your strike or above your strike at expiration, or you have to get out at a profit. Before expiration, one of the two. So, I mean, you could buy at 10 and sell at 30, or you could buy at 10 and hold it till expiration. So, basically, I like the spread simply because I don't have to worry about an all-or-nothing situation. A lot of times, I may have a trade that didn't work out the way I wanted it to on a spread, but what will happen is, I'll break even on one side, or I won't lose everything on one side, or I'll make money on one side, but not as much as I wanted. But rarely do I lose on both sides unless it comes back up and expires, say, like right in the middle. I mean, that's about the only way you're going to lose on both sides of the trade. So it puts the odds in your favor because the market doesn't have to move as far for it to not be a negative trade for you.
I see. And if, let's say, like it did this morning, when you the long part of that spread, as soon as it went below, you've maxed your loss on there, and you're gaining on your short. And so you don't have to take off the long side at all, do you?
No, I leave the long side on. A lot of times, especially after I've taken profit on my short side, I'll set my long side for break-even exit. So, because every once in a while, you'll get a trade that pops down, fills your take profit on your short side, and then flies back up. I mean, just think like Fed funds rate when things go nuts, Yeah. And think it flies down, flies up, and you actually may be able to basically maximize your profit by getting out on one side, and then it bounces back up, and you get out at break-even. If it's really flying, I may even take off the break-even order and manage the trade and see if I can actually make some profit on both sides of the trade.
Very cool. Thank you very much, Darrell. Really appreciate that.
Hey, you bet. No problem.
Okay, have a great one.
Hey, thanks for calling in, Brett.
You bet. Bye-bye.
Bye. But yeah, so very, very cool trades, and appreciate you calling in. And the reason they're my favorite trades, I know what market to trade. I know exactly what time to trade. I only have to spend about 15 minutes doing the trade. And I don't care what direction it goes. So there are times, of course, when, reports conflict and it doesn't work out. But, the majority of them have done really well. And, so it's just, to me, it's a very low stress trade. And every once in a while they do work out and you actually get to make money on both sides. And that's very cool when that happens. All right. So going back over, and like I said, I was talking about the Dow for a second there. And on the Dow, I was talking about how, hey, we hit one deviation. There's nothing wrong with taking profits off at one deviation level. Okay? And let's see here. If we go in and check out a couple other things, we can go in and we can look at, we'll check out some of the commodities right here. So we got corn. And corn moving on up 0.5, 0.7, trying to hit 0.7, still stuck at the 0.5 level, not out yet on the long side. Right there is where our stop is. And we'll see if it moves on up to 738. If it closes above that, we can tighten the stop again over there. And actually, let me go to 10-minute bars. It does work a little better. In this case, it's actually the exact same bar. So exact same price level right there. And but yeah, tighten the stops up on the long side. So just the stop on corn, if you're long right now, you got to have your stop right around 734. So basically a couple ticks for bid-ask spread and one tick below the bar. If we go and we check out soybeans, look at that market, see if there's anything going on there. And basically went up and hit the half deviation, has not broke it yet, so the stop has not officially been tightened yet. But it is just within a couple ticks. So within the next 5 minutes, if it can get up there, then you got it. If you're nervous, I mean, you could always tighten it up early, but you may miss it. What if it decides to move and take off? Markets aren't open for too much longer over on the ags, though. So you're going to be looking to tighten up that stop pretty soon. I'd at least have it, depending upon where you got in. Let's say you got in down here on the reversal. At least have it right here. And just so I don't have a winner turn into a loser. But now it's really more about maximizing the profit. And hopefully it'll move a little bit up. But it looks like it's really close to doing it. So once it does, then we'll be able to tighten our stop up. So there we go. We just broke through or at the deviation. 1 or 2 more ticks, we'll be able to move it up. And let's say this bar does close above it. Then what we would do, okay, so if it does close above it, then we'll set our stop right, just basically, like I said, basically one tick plus a couple ticks for bid-ask spread, right there just below that bar. And now it's at the deviation. So if it'll close above it here in the next few minutes, we got a low side one. There goes it. Just broke it. Going on up. Looks like it's taken off. And there we are. So, like I said, just a few more minutes, and now we'll be able to move that stop on up. And you've locked in your profit now, but you've still given the ability to let your profits run. And that's huge. You want to let your profits run. So many traders will let their losses run and cut their profits short. And so you want to cut the losses short, hence Nadex, but you want to let the profits run. And you can trade corn, soybeans, and other markets like that over on the Nadex platform. Going in and checking out a couple other markets here. We got soybeans, we got corn we knocked out. We knocked out all the U.S. indices. And let's go ahead and check out natural gas. Pulling that on up. Natural gas, it's really taken off today. It's getting back into the swing of things. You saw yesterday actually hit a 2 deviation level. And right now at 0.5, so we tightened that on up on the 0.5 level there. And then it came back down and also hit the 0.7 in the exact same bar, closed above both of them. Pulled on back down, finally closed below the 0.7. Then right over here, we just on this bar closed above the 0.7. So we're able to tighten our stop again, moves on up, closes above the 1 deviation, able to tighten that stop again. So right now you basically have captured 1 full deviation. You could be out or you could be continuing to trail it, or maybe you're out on part of it and shooting right now for that 1.5 deviation. Like I said yesterday, it moved on up. It hit 2 deviations before the day was over. You can see that 1, 1.5, and then actually spiked up and just slammed on that too, right there. Okay, so that knocks out natural gas for us. And I'm real curious about this soybean one. I want to see if it's going to close above it. So it's just got 2 minutes left. Looks like it's about there. And we'll go on over, look at, I know oil was moving when we were looking at the beginning of the show. And so it's still above there and sort of oscillating right now. So we got to stop down here at 96.20. If you're in an oil contract, I mean, you may decide you just want to take it off. If you're oil, in spreads, then, you have a choice to make. But it looks like it may pull back. I don't know how much more movement we're going to get out of it today. I guess we'll find out. But to be a disciplined trader, to let your profits run, 10-minute deviation method seems to work more often than not. And so let's go ahead now, and we got our energies covered. We got our ags covered. Let's go ahead and check out our metals. So right on here, let's go ahead into gold. And on gold, we can see it's sitting right now up at that deviation level. So it's moving around, started taking off this morning. Had a nice gold trade, took advantage of right off this level right here earlier today. And but it moved on down to 0.5 and 0.7, 1. And we'll go into this one when we come back right after this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-rate XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And I'm just looking at a few different markets over here and what we got going on right now, checking out the metals. And on gold over here, looking at this and basically just tracking what happened on it this morning, how you could have traded it, and how you could use the deviation levels to help you. So if you're in here, you got a very simple long pattern going on. So you go in and you take a buy trade on gold. And when that happens, you then got to trail your stops. So right here, we trail up to here, and then actually we trail a little bit higher. We trail up at this point, and then you easily could have got stopped out on that trade. Okay, so you're done, you're out, you're stopped out. You get a pullback right after it's the one deviation, but did not close above the deviation. Pulls on back for you. You get a second entry. So basically, this is how I always take my trades. I go in, new high, look for a breakout of the previous bar's high by at least 2 ticks. And then I look to get a new long right there. So you get a new long, you buy in at this point. That also, by the way, since that's the bar that closed above the deviation, becomes your stop. And as it's moving on up, goes up, closes above the one deviation. You put your stop right there. And if we look at that bar, we get a low of 1607. Put a few ticks below that, 1603.7. Or sorry, 1606.7. And so we go down on this one to 1606.6. So we are stopped out of the trade. And basically we got to capture basically a full deviation. And sometimes people go in and they get upset because they don't capture everything. It's okay to get out. So you get another entry, you can always get back in. And yeah, did I give up some of this movement? Yeah, I did give up some of the movement. But you know what? I locked in my profit. If it would have fallen back, I didn't give it back. And then I got another entry so I could take advantage of it when it moved on back up. So right there, you know, simple, easy trades. And this is the trade I was looking at earlier, and I'm just looking for. I actually did a binary on it. As soon as I got the break up, went into 1604.4 greater than binary for expiration at noon. Pretty short trade, and worked out well. So expired right above the price for me. That covers gold for you. Let's go ahead and check out the silver markets. So over here on silver, what we can see is we moved down. We got a 0.5, we got a 0.7, we got a 1, and we moved down to 1.5. Did not close below it, and but we did definitely close below. Let's see here. Actually, let's look at this. We got a low at 28.20, actually close, 28.32.5. So we actually don't tighten on that one. I guess you could tighten it in the sense of you tightened it for the 0.5 and the 0.7, but it didn't tighten it for the 0.1 for you. Closes up a little higher, closes down, which is good because it allowed us to actually reset and tighten a little tighter right there. We got to tighten right at 1 deviation, which is perfect. Because that, hey, if it comes back up from 1 deviation, hey, I'm okay. I don't even mind closing out at 1 deviation. So, but it goes on down, comes back up, and we do get a few ticks above that over here. Or worst case, let's see here if we go in. I mean, you could have tightened it, I guess, maybe one more time if you didn't get stopped out on this bar. If we go into the, let's look at the high, that 28.34, and what's this bar here? 28.34.5. So you actually didn't get stopped out on that bar. So, but since it closed below it, and then closed above it, and then closed below it again, okay, so now we're tightening it almost like right to it. And right there, the high of that bar is 28.33. High of this bar is 28.34.5. So that's definitely 3 ticks above. And so this bar stops you out, just to the tick before it came back down one more. Well, we'll hit that 1.5 deviation, pulled on back up, and started flipping around and going the other direction. And so if you do take the reversal after these crazy spikes going on over here, and that was obviously early morning trading, and you would have had to be just really on your game to capture that early in the morning. I don't trade that early personally, but that's how you would have used it to do so. So the market starts turning around, going back in the other direction. If you're trading silver, you got nailed. If you're trading silver on Nadex, like with the binaries, things like that, hey, you can't get stopped out. So anyway, stay right there. We have another great show coming up for you right after this. I'll see you tomorrow, and thanks for tuning in right here at tfnn.com.